commerce, and let's see, I can't. The third one I can't. Sorry. Oops.
Hi everyone, Tim Knight here, Slope of Hope, and I pulled up this chart of the ES from December 19 to present, and this is what 100 points on the ES looks like. Didn't take long, did it? Just a few weeks' time, pretty much a relentless up. There isn't a single meaningful down move at this entire block. I mean, we could move down 20 points tonight on the ES and it wouldn't interrupt the uptrend. This has been appalling and very interesting. I have been very conservative in my positioning, and gladly so. I have maintained cash levels really unlike I've maintained in a long time, hovering around 70, even 75%. I am not chasing this rally, and I'm keeping shorts small and few and far between, until such time as it's evident that this uptrend is broken. Hasn't happened yet. Big news today, of course, is earnings. Thumbing through these, Intel is up nearly a full percent. IBM, these are after hours quotes, of course, up nearly 3%. Astonishing rise there. Microsoft also up very heartily, 2.5% approximately. The only stinker is Google, which is down an even 9% right now. Almost $60 after hours. So a lot of happy options holders on the put side and a lot of really upset ones on the call side. Big dollar mover. And Google's funny. It always gaps with the earnings no matter what. It never moves up, you know, 0.25% the next day. It's always a big move in some direction or the other. So not huge amounts to say tonight. I'm going to make this relatively brief, just kind of catching up a little bit. The S&P did very cleanly break out yesterday, and it really continued on that path today. There is this descending trend line. I put some stock in it, but not massive amounts, because it's really only based on a couple of data points here, and it doesn't particularly reflect some meaningful area of overhead supply. It will, if this is crossed, it'll be worth noting, but whether it does or not isn't especially important. The simple fact is that since October 4, the market's been in a general uptrend, so that's 3.5 months now of just pushing higher. It had seemed earlier that we were kind of getting into the heart of something more meaningful, but that has been reversed quite handily. I'm looking at another screen right now on Zero Hedge, which is a site I look at every day and I like, but let's face it, they, like Slope, lean toward the bearish side. They're much more apocalyptic than Slope, but their big featured story is payback for the rally is coming in Q2. So this is the same kind of thing, I guess, that been going on for nearly 3 years now, which is, just you wait. The psychology of tomorrow. And I'm, a little weary of waiting that, the crash is just around the corner. So many things have been offered up as proof that something big is about to happen. GAN cycles and analogs and OPEC's weak statistics, and I haven't seen any of them work yet. From time to time, an analog works out, which is interesting. The one that I've been obsessed with, which has been working fabulously, is GDX. That's really the only that and the euro are the only areas that I sort of hold up as remaining worth watching. The simple fact of the matter is that on a day like today, when equities went up across the board, everywhere, GDX fell over 2%. Period. And the euro was up strongly. That is a meaningful representation of how potent a short I think this could be. My view is that we are right about here in terms of the analog, and it is my deepest desire to see this kind of move happen next. So I poo-poo analogs that peter out, and there have been many that have. But as of now, GDX is just doing great. I would also, on a related note, although I'm not as fervent about this because it's a harder one to read, but it's my view that the euro analog, which is kind of a three-peat, we've got 1, 2, 3, is still intact. I'm not quite sure where to put this resistance line. I have been moving it to and fro. Currently, I've got it laid down at 1.3077. This could get as high as the underbelly of this, although that would damage the analog to some degree, because in the past, it should kind of poop out at some given horizontal line here, but we'll see. Bonds have, as I noted in my post today, have weakened considerably. This, like GDX, seems to be the only thing that's safe on the bearish side. I haven't been really comfortable pursuing this for a couple of reasons. One, the dividend, and two, if and when the equity bear market kind of gets going again, this is going to be one of the first things to rise. So I'm a little uncomfortable with that. A few ETFs to look at, give us a little bit of insight. BGU obviously had a strong day, and I don't trade this as a triple leverage. I kind of avoid these leveraged items, but this clearly illustrates the kind of smooth equity breakout that's going on. IWM also has very plainly broken above its resistance line of 76.68, and until and unless not only is this line violated, but this trend line is violated, this is in an uptrend. And cubes have not only broken out of this triangle and didn't even bother looking back, but are, as I noted with some chagrin, are at a decade-plus high at this point. So amazing performance. Apple is on deck next week. I forget the exact day, but that will have even more attention on it than Google, of course, because Apple. I'm not sure if which is in the top, Apple or Exxon, but let's face it, Apple's effectively the most watched company in the world as far as stock market direction, because it has become such an important part of the stock market, been such a huge performer. So that will be of note next week. I had done some day trades on gold with some success today. In spite of the euro's strength today, gold did show little bouts of weakness here and there. I'd like to see it stay beneath 161.64. And although I don't trade it, I note with continued shock at the complete annihilation of natural gas. It's sort of funny that Mr. Bear here missed out on really the great bear opportunity of the decade, because this thing seems to be headed lower every day. It's the closest thing to a sure bet there seems to be in the world of bearishness. Looking at the candles here, I mean, even during the financial collapse, there was fighting back, but this thing is just down, down, down. Unbelievable. Obviously, it will pop at some point. There may be a day where it's up 15% or something like that. Who knows? But the people who have been jumping in anticipation of the day have been getting monkey spanked. I would just wrap up here with something I also haven't touched in a while, Netflix. This is kind of representative, I think, of the kind of junk that's been powering the most recent rally. I mean, if you look at things like, Bank of America as being leaders in this rally, it kind of shows you what it's all about. Netflix has moved just in the span of a couple of weeks from the high 60s to the triple digits. This has been an amazing, 35% or so move in just a very short amount of time. But I would just note this gap is about to be closed. I'm not touching this thing, but if I had the happy circumstance of owning this thing, I sure would be looking to that as an opportunity to get out. So that is it from me. We'll see if this uptrend ever ends, but I'm trying my best to play it safe. And with that, I bid you a good evening.